Look at the thumbnail of the video. I actually took the screenshot before this happened, and my main point was I knew it was an obvious triangle forming, and I didn't think we would get the breakout today, but I thought probably I was going to mention, but I thought we were probably going to get a bearish breakout of the triangle because we've been overbought for the past couple of days. We've had such a strong rally that we were probably going to pull back, so it would be unlikely that we were going to form this triangle and then get another breakout to the upside. So, it was slightly more bearish than bullish, maybe like 55% bearish and 45% bullish. But it's not that surprising that we got the breakout towards the end of the day. Today was one of those classic midday reversals. And, one of the keys, I think, to identifying something like today is look at these bull bars 25, 24, 25, right? 31, 36. A lot of big bull bars in this move down, which means that it's more likely that we're going to end up getting some sort of reversal. And a lot of times those reversals are midday reversals, which is what we got today on 41, 42. A couple of keys too, because if you're a trader, what you really wanted to see today was this, and then once you saw 41, 42, you started thinking to yourself, okay, I would really like a pullback and then another reversal up. That's what I think that most traders were thinking. But the problem is, whenever you think I would like the pullback and then a reversal up, a lot of times what happens is everybody's thinking that. And so some traders will start establishing a position. And when too many traders start establishing a position, you're not going to get that pullback, and you'll end up getting, you know, something like this. And, one of the keys that was going to happen, you can see the 42 low does not overlap with the breakout point of 38 high. So we have open gaps, we have open gap with the 40 low, etc. And I thought that once you started seeing, 46, 47, you got to just start buying. It was okay to buy 42, but if you buy 42, the bear channel down was pretty tight. So you're risking a deeper pullback. And this is really interesting. So what is 43 actually doing, right? If you're buying before, if you've been trading long enough, you know that buying above 42, you're going to get a pullback a lot of the time. And what is the pullback going to look like? It becomes the question. If you look at 43, what it actually does is it creates, you wanted that higher low, right? You wanted to pull back a higher low and then a reversal up, but it's a bear bar, but actually on a smaller time frame, it is the higher low. You can see here. So we got the breakout. That's the past two bull bars. And then we did get the pullback on a smaller time frame and then the breakout above it. So, I thought once you started to see, maybe 46, 47, okay to be buying and putting a stop below there. And I think a lot of bulls really, once they saw 43, were probably, if you bought above 42, it was kind of hard to just exit below 43 because you kind of had to expect that coming. But that did create the higher low just on a lower time frame, which is important to notice. Bar one, a bear bar, but a big tail on the top, a big tail on the bottom. Again, we're gapping up, and we've had two pretty strong bull trend days. I'm expecting us to go sideways to down for at least a piece of the day. Bar two, a bull bar, but a tail on the top, and then a doji bar on three. So bad follow through, but minimum follow through for the bulls. We're probably always in long, but really not that great, forming a trading range. Four, a high one for the bulls, but a doji bar. And five is a double top with three, so double top bear flag, but it's really not all that good. Three doji bars. When you get three doji bars, in a row on the open, something to be thinking about is it's probably going to be a trading range day. Especially, anytime you see a particularly large number of dojis on the open, you should be thinking, oh, like that's interesting. This might end up being a trading range day. And that was another hint, right? So you're getting these strong bull closes and you have dojis on the open, meaning that we might end up getting a vacuum test to around the open of the day, which is basically, right where we got to. It's a trading range day, so the open of the day is going to be a magnet, and you can see we ended up reaching it. Bar six, big bear surprise, but a big tail on the bottom. Basically just testing yesterday's close. So really not much to do here, I don't think. Bar seven, a bear bar, or a bull bar, but a big tail on the top and the bottom. I'd rather wait. If six was more of a buy the close bar than a sell the close bar. And you see seven, some bulls might have bought the close six, being willing to scale in lower. And then where does eight go to? Eight goes to the middle of the tight trading range. And that was the target. This bar six is a sell climax, and sell climax highs and lows, or sell climax highs and buy climax lows are targets for traders. So you can see we got sucked back into that area from 3 to 5 during 8, and that's where traders took profits, causing the big outside down bar of 9. If you sell below 9, kind of hard to do. I think you're selling low in a trading range, and it's a big bar with big risk. So not really that great. I think you'd rather, wait. And that's why when you get 10, this is part of the problem with this trade. If you sold below 9, what do you do with 10, right? You wanted a better follow through than that, and you didn't get it. So a lot of traders exit at the market and you get 11. And if you sold below 9 and you didn't exit on 10, now you're staring at 11. And now really what do you do? Because, you probably have to get out above it, but it's not really all that great to do that because you're probably going to get a lower high. So it's really just not as good as it could be. And then on 12, you get a bear bar closing near its low. I think okay to sell 12. It's a low one short or wait for follow through. 13, some follow through, but again, bouncing at yesterday's close. We're trying to form a wedge 1, 6, 11, and bulls are hoping that we're having a pullback essentially on 12 and 13. But instead, a bear bar closing near its low 14, clearly always in short. Probably was always in short on 9, but I think now that we have follow through this breakout, we're clearly always in short. And you can sell below 14 looking for follow through. I think the problem with selling below 14 is you're selling right smack in the middle of this trading range. And, just how I mentioned that channels, like the top of this channel was one of the targets. Where are we probably going to start to sell off to? Well, one of the targets, probably the bottom of this channel, right? You could even argue, I believe I said yesterday, this is the spike, this is the channel. And then you could say this is the start of the channel, and that's where we tested to, basically the swing point, which was buying above here. So pay attention to those swing points. They're really important in trading ranges and just in general, but particularly in trading ranges. 15 follow through for the bears, and then 16, a bull bar, big tail on the bottom and on the top. I wouldn't buy above 16, but I definitely would exit. If 16 closed stronger, it might have been an incredible buy for some sort of wedge and a potential low of the day, but the bear channel was relatively tight. But you can see, what did bears do? They saw 16 and they sold the close of it, and that's what caused the big bear bar on 17 because they knew other traders would exit above 17, or above 16. So bears, maybe their stop was initially up here, and now their stop is here, right? So they'll sell, risking basically nothing, you see, they would have done very well today, and you don't have to win that trade very often for it to be profitable. 18, a doji bar. I don't think exit above 18. I would just keep my stop above 16, and then big outside down 19, follow through 20, and then doji bar 21. To sell the close market. So whenever you get a doji bar in a sell the close market, the sell the close is probably coming to an end. 22, kind of a disappointing bar, and then follow through for the bears 23. But if you're selling down here, you're selling, really low in a really parabolic channel. So I think pretty hard to do. And then 24, bears starting to buy back shorts at the new low. And a lot of traders exiting above 23 during 24, and then follow through on 25. Do you buy 25? No, because I think that 24 is bears who are fast getting out, right? Bears, they're down here. You can see we got a micro gap. Some traders exited here. They exited as it was going up. They exited above 23. And then what is 25? 25 is the rest of the bears exiting. So any bear who didn't get out during 24 is going to get out above 24 if you're short, right? And that's what's causing 25 is bears buying back shorts. So now you have 24, 25. You're near the moving average, and there's all the bears who are going to buy back their shorts are now out. So what do you need for us to keep rallying? You need bulls to start buying. And so this is the transition point, I think. After 24, 25, you need 26 to be another good bull bar where, bulls clearly step in, and bulls need one more bar. And so it's probably not going to happen. And that's why you get disappointing bar on 26. And any bull who did buy knew it was low probability. So they see 26 and they're just going to exit, and that causes 27. Big bear bar closing near its low. Once you get that, that 24 and 25 are probably strong enough for another leg up. So some traders who bought up there are scaling in lower, like below 24, but hard to do. And we'll probably get back to that 24, 25 close at some point. 28, a big doji bar, not as good, or not a big doji bar, but a big, sideways bar. Bad follow through for 27 since you have big risk and you're selling towards the bottom of this channel. 29, an inside doji bar, but I would just rather wait at this point. I think at this point, I'm going to need a really strong breakout to the downside. Otherwise, I'm looking for some sort of midday reversal. So if there's a downside breakout, it better be, extremely obvious. Otherwise, I'm not selling. If it's just a weak channel and it keeps doing this all day, then, it can go without me. That's fine. 30, buyers below 29. And then you can see buyers try to buy the new low of the day and a reversal up 31. I think this is just a tight trading range now. I wouldn't really do anything. I'd rather be flat. 32 triggers the low, the low 2, I guess, below 31. It's really just a mess, though. It was a mess all the way through 36. I wouldn't take any of these trades. You could argue, 33 is a wedge, 24, 28, 33. And then you get two legs up, 34, 36 towards the sell climax high of 32. But I think that just in general there, you can think about it all you want, but, and you should think about it, but what's important to note is that we're forming a tight trading range deep in a bear trend, meaning it's probably some sort of final flag. So when you get 37, what is 37? It's a breakout attempt below the final flag. In a breakout attempt in a bear trend, a breakout attempt below a final flag is not very high probability. Inside bar 38, 39. So we had one failed breakout below a final flag, or one breakout attempt below a final flag, 37. And now we have another final flag, inside pattern. And again, inside patterns is just a triangle, right? On a lower time frame, it's just a triangle. The same way that this was a triangle. So it's the same thing. So on some time frame, this looks similar to this. And prime example, we got a failed breakout below the triangle or below the final flag. Generally, when you get an II, 50-50 chance the first breakout's going to fail. But lower in this trading range, it might have been more like 60% chance that this breakout was going to fail to the downside. And you can see it was a failed breakout, 40 midday reversal. Bull surprise 41, 42. And, it's possible that, this ends up being a failed breakout and we get a reversal up. I don't think it's as likely because, again, we're high in a bull trend right now on the daily chart. So, or on the past couple of days, we're high in a bull trend. So I think, pretty 50-50 this breakout, I would say. Or maybe, like I said, 55% for the bears, 45% for the bulls. But midday reversal 42, 43. Or 41, 42, open gaps, okay by the close. Doji bar 43, like I said, a higher low on a lower time frame. Then follow through 44, 45. Big tails on the top, so you're waiting for that good bull bar closing near its high so you can buy. 46, maybe you can buy, but a tail, I would probably wait for 47. The only problem with buying 47 is any bull who bought the close of 25 and had scaled in is disappointed. And you're buying basically right where they might sell out of their longs. Except they don't this time, and you get follow through. So that shows that the traders, instead of selling out, they're buying more. And that's how we're getting such good follow through 48, 49. It's a really tight channel, but this was also pretty tight. Obviously, this is stronger. But my point is, you have to realize this is probably, a rally within a trading range. So I'm not sure how much higher we're going to go. We might get to, again, the open of the day is obviously a target, and bar 12 open is a target since it's the top of the channel, but I don't think this is going to turn into some massive rally into the close, especially considering the context on the daily chart where we probably aren't going to get a big rally. 51, a bull bar, but a tail. 52, a big tail on the top, probably coming to an end soon. And then 53, an inside bar, potentially a 1-bar final flag. And then 54, failed breakout above the final flag. And then we get a breakout below 55. That always in bulls, a lot of bulls will just exit below 54 since, we're so overdone. And if you're long, what's the point? You can see this whole thing was a big micro channel. We never traded below anything else. So it's 15 bar bull micro channel. So the first reversal down is probably going to be minor, and we might have to rally back to this 54 low, which we tried to. But the problem with holding is the pullback can be extremely, deep. So I would rather just get out below 54 or 55. The first reversal down will probably end up failing, but still. And bulls exiting is what's causing 56 and 57. And do you sell 57? I think, selling 57, I had a lot of similar problems that I had with buying 25. 58, disappointment. And then 59, probably just bears who sold to close 57, disappointed 58, exiting 59. Second leg down, 60, 61. And then, this ended up just being a wedge pullback, right? 1, pullback, 2, pullback, 3. Excuse me. And we basically tried to test around this high where traders initially got trapped. And when we did that during 68, we got a reversal up, follow through 69, doji bar 70, and then more follow through 71. And we're just trying to get back to the 54 low. We'll probably get a lower high from 55 to 67, but still expecting some sort of higher low. And then, for stop orders on the day, obviously then triangle and breakout below. For stop orders on the day, I thought 9 was okay, but I think it's kind of tough. 12 is good, 14 is good, better, higher probability. You could probably sell below 17, just hard to do. 19, same thing. You get out at the latest above 24. Maybe you could sell 27, but I think that's pretty difficult. I wouldn't really take anything else until, maybe 41 if you're aggressive. 42 is fine. Follow through. If you're buying above 41, though, you're putting a stop below 40 and, maybe a limit order at around the open of the day. Oftentimes when the market, or maybe, I thought the 11 low was a magnet too, since it was a breakout point where traders got trapped. Oftentimes when you're getting a some sort of breakout attempt. Sorry, not breakout attempts, or try and test some sort of obvious magnet like the open of the day on a trading range day. Traders will put their limit orders a couple ticks below for exactly this reason. Like, this is a perfect example of it got really close within a couple ticks, but it didn't quite get there. So sometimes instead of the open of the day, you'll put your target like a point below the open of the day or something. But I thought 41 was fine if you're aggressive, but you know, a lot of the times you're going to have to sit through a pretty nasty pullback. So if you're buying 41, you put a stop below 40 and you know, leave for an hour. But it's kind of counterproductive because if you go below 40, there's probably buyers below 40. So maybe you should be scaling in. So kind of difficult. Follow through 42. Okay, by the close. You know, maybe 46, but I'd rather just buy 47, 48, 49, 51, but very high at this point. Excuse me, my throat gets dry from these. 55 maybe, but I would just probably be done. I don't, you know, I think if you're trying to take a sell like 55, you've kind of missed the point because it was much easier to be buying. But it is a big double top. And, you know, the neckline of it is essentially what we tested at the end of the day. So double top, neckline, and we tested down to it here. You know, maybe 57, but hard to do. Maybe 64, but hard to do. And I would probably just be done for the day at that point. Where do we go from here? Well, you know, this kind of changed things a little bit, but obviously we have a big low one, right? So spike, pullback, low one. But, you know, low ones are or really only acceptable in the spike phase of a trend. And you got to ask yourself, do you think this is a bear trend or do you think this is a leg in a trading range? For me, with how strong this is, I think it's a leg in a trading range. And maybe we got a 50% pullback. I'm a little past. Okay. So a little bit past the 50% pullback. But I would not sell this low one. I think there will eventually, or they're probably going to end up being buyers below that low one if we trigger it. We might get a little bit of a dip down somewhere in here. But ultimately, I do think if we trade, you know, somewhere down here, we'll end up getting a bounce. I do think, you know, I think we'll get to this low or this bar's low because it was a breakout point and bulls bought below here and they got trapped and they shouldn't have. I think we'll probably get there before we go here. It depends a lot on tomorrow. If tomorrow's bad follow through for the bears, which I suspect it will be, so I'm expecting something disappointing for any bear who's selling below here, then I think we will get here before we get down here. You know, we're coming up on the end of the month and the bears have done, oops, that's the weekly chart. The bears have done a decent job and the bulls are trying to put as big of a tail as they possibly can on the low of this month to make it look like a pullback. And so we don't pull back this gap. And yeah, that's the day.